Hello, welcome to Business Week, the program that brings you top business stories that made the headlines during the course of this week, including special news features, market data, interviews, and much more. Welcome to the show. Here's the highlight of the biggest stories we tracked for you over the course of this week. On the local front, Nigeria's total trade rises by 23.28% to sum up to 12.02 trillion naira in the second quarter of this year. The Nigerian Communications Commission has also proposed a fine of 200,000 naira for mobile communications services providers that fail to verify and validate biometric national identity numbers and other personal information of each subscriber of their services. Now, the amount spent on importation of petrol in the first half of this year jumped to 1.4 trillion naira, which is more than 73% of what was incurred in the whole of last year. The Debt Management Office has also opened a September savings bond offer to investors, and according to the circular, 2-year savings bonds will be due for redemption on September the 15th, 2023 at 7.915% per annum, while the 3-year offer would also be due on September the 15th, 2024 at 8.915% per annum. On the international front, Saudi Arabia, the world's top oil exporter, slashed prices of all crude grades to Asian customers, which is expected in October versus September, but also left prices to Northwestern Europe and United States steady. In the cryptocurrency market, El Salvador is now the first country in the world to adopt Bitcoin as a legal tender. A real-world experiment, proponents say, will lower commission costs for billions of dollars sent home from abroad, which critics also warn may fuel money laundering. The United States Securities and Exchange Commission has also threatened to sue Coinbase Global Incorporation if the crypto exchange goes ahead with plans to launch a program allowing users to earn interest by lending crypto assets. And now in the aviation sector, Chevron Corporation has set plans in motion to produce a test batch of sustainable aviation fuel and sell it to Delta Airlines at Los Angeles International Airport. It's now time to bring you special packages prepared by our correspondents. Now, in this first report, the Department of Petroleum Resources has intensified efforts to curtail incidences of gas explosion in Lagos State, with the closure of 8 illegal liquefied petroleum gas plants. Now, the DPR, which is the regulator of the oil and gas industry, has stated that the affected cooking gas plants are sealed for not complying with the prerequisite safety standards and operating without pertinent approvals. Adeshawa Odushoga reports.
Another day, another explosion, many of which have claimed lives and properties, leaving victims to mourn and count their losses in pain, drowning in their own tears. Lagos State had been a scene of one too many gas explosions, and to avert this incessant crisis, officials of the Department of Petroleum Resources in Lagos State have moved to close 8 illegal liquefied petroleum gas plants. The sealed gas plants are located at Idimo, Ikontuegbe, Ipaja, and Igondo axes in Alimosho local government area of the state.
Despite several stop work order and seal placed on those illegal LPG facilities, when the proponents or the defaulters, they still continue their activities. And then because of that, as a department, under our watch, we feel that we should carry out our statutory oversight to make possible arrests and hand them over to law enforcement agency.
Between January to June 2021, the agency have sealed a total of 59 illegal gas plants in Lagos to help sanitize LPG facilities in the state, enforcing standards in their operations.
You cannot operate a LPG plant anywhere in Nigeria without applying for pertinent approval from DPR. However, the approval are in three phases: site suitability, followed by approval to construct, and lastly, license to operate.
In its efforts to put an end to the ugly accident of gas explosions in the state, Mrs. Ogundare notes that the agency organized a safe awareness campaign to instill safe handling of cooking gas in the general public and raise awareness of the consequences of not properly managing the commodity.
And coming up next in this report, non-compliance to import and export guidelines has been identified as a major impediment to trade facilitation in the country. The Customs Zonal Coordinator, Assistant Comptroller General Module Aremu, has also called attention to the recurring trade infractions during a tour of the commands in Zone A. TVC News correspondent Ifunayeze tells us more.
This is the first time the Zonal Coordinator, Customs Assistant Comptroller General Modupe Aremu, is touring commands in Zone A since her deployment in June. At the commands visited, the Zonal Coordinator inspected the Guard of Honor. At the Federal Operations Unit Zone A, the Area Controller Usman Yahaya took the team round the command's warehouse where thousands of bags of seized smuggled foreign parboiled rice were kept, among other seizures.
Most of this rice has stayed maybe 5 years or 10 years. It's even expired before they now bring it into Nigeria. So it's not healthy. That's what we're trying to tell people. All this outbreak of cancers, all kind of diseases are the result of all this expired rice that Nigerians are consuming. So we're preaching that it is time Nigerians have a change of attitude, have a change in their mind that it's not because the rice is imported doesn't mean it's good for you. Nigerian rice is nutritious.
At the Murtala Mohammed International Airport, the ACG Zone A also got an update on the command's activities. Officers there also showcased smuggled items that were falsely declared, prompting the call for compliance to trade guidelines.
If you have correct declarations, there will be no alerts. You take your things out. It's seamless if you are compliant. So we're just trying to urge people to be compliant. When they are compliant, we have increased revenue and they will have shorter dwell times in our warehouses and our seaports also.
The Zonal Coordinator's tour of the zone continues as she charges officers to uphold highest ethical practices.
It's now time to delve into the feature on the show today as we're looking at strategies and efforts to support the next generation of startups in Nigeria and Africa at large. Details of this and much more is coming up shortly after this break. Many thanks for still staying with us. Let's now deal with the crux of today's discourse. Over the last few years, regulatory events and policy announcements have raised concerns about government support for the tech industry and other emergent sectors of the economy receiving global recognition. Now, for Nigeria, the ruling sentiment is that enough is not done to support innovation and young people who are building startups in the country. These are critical building blocks and engines of growth to catalyze any economic recovery prospects. As part of efforts to proffer solutions is the Nigerian Startup Bill, which aims to achieve this and would also ensure that all government agencies and parastatals are aligned on the vision for the Nigerian tech startup ecosystem. Now, the bill is also an opportunity to update existing but outdated laws. The Nigeria Startup Bill project is a joint initiative by Nigeria's tech ecosystem and the presidency that is driven by the Federal Ministry of Communication and Digital Economy to harness the potential of the digital economy through co-created regulations. Using its big tent approach, the bill is aimed at getting input from both government and tech ecosystem stakeholders. Joining me now to discuss this and much more, I have the founder of Collab, Sanusi Ismaila. Good to have you on the show today.
You're welcome. Happy to be here.
Let's now start off this conversation with your thoughts on the role of tech startups and other startups in emerging sectors of the economy, with an emphasis on the business climate's ability and government's ability to also support innovations. To what extent do you see the Nigeria Startup Bill play a catalytic role and then become a law with very strong implementation strategies, especially following consultations to perfect the framework?
Yeah, I mean, I think that the starter bill itself will eventually become like the cornerstone that maybe supports like a lot of these growth. Because I think it's important to remember that technology startups, which are, what the Nigerian startup bill is focused on, are sort of like this experiments to figure out whether they can solve a problem well enough for a market big enough such that they become like really large companies. When you think about, companies that started like startups, the things that come to mind would be like the Facebooks and the Amazons and companies like that. And the idea is that if you're able to create like that enabling environment, a lot of these ones would fail, but the few that would succeed would become very big and become big employers of labor, a big demand for services which smaller business can fill and have a lot of network effect. The startup bill will do that by creating regulatory uncertainty, making the business environment more enabling, and also taking care of the local content bit. So imagine that you had this enabling environment to grow a couple of Amazons in Nigeria, or a couple of Facebooks, or even a couple of MTNs, right? The impact would be significant.
Let's now look at the bigger picture of ensuring we have successful startups. This is also premised on great user experience, especially with disruptions like the COVID-19 pandemic, which has led to the transition of businesses and solutions online, now from idea conceptualization to packaging and even product to service delivered. This watchword has to be emphasized, wouldn't you say, even to response time of customers' complaints.
Yeah, I totally agree with that. Like I said earlier, startups thrive by solving problems, and I mean the best ones solve those problems exceptionally well, which means that they're offering really great service, offering really great after service, which is customer service, and offering a really great product, all packed in one, and having the packaging and everything that makes a product successful. And that's important. But the thing to note is that to do that, you need to have, I mean, a lot of bandwidth to focus. So meaning if, again, something like the startup bill happens and takes away like some of the other firefighting that usually happens, like, and allows them more bandwidth to focus on delivering this exceptional service, we most likely would see a lot more of that coming from the startups.
Another essential information-related aspect is the protection of customer information and intellectual property and overall data security. How critical would you say it is to adopt working models which cancels out any form of compromise, because clearly this makes or mars the success of the startups?
I mean, yeah, data security is super important. That's because data is sort of like the new gold, right? Everything successful now is sort of like built on top of data. Unfortunately, the thing about data security is that it's never going to be 100%. Like you alluded to yourself, like the really big companies, some of them leading companies in technology have fallen victim to some of these things. The one thing though is that you know you can at least dissuade the use of these things via regulation. And interestingly, the NSB Nigeria Startup Bill has a section around protecting IP, because we think that it's one of the super important areas that startups typically struggle with. So how can we make this faster, and how can we have laws that would protect them and protect their intellectual property, such that when there is such a breach or something happens, you sort of can mitigate that and take it to court and have punishments for things like that.
The reality on ground really now for many startups finding a means of staying afloat also means rethinking, re-strategizing and also retooling. Take for example, in an attempt to replicate high-tech clusters of more advanced economies in Asia and the West, several African nations also developing innovation hubs that is hoped to help amplify partnerships between large companies and then startups and draw talent and foreign investment. But what do you think are the biggest prospects and challenges of startups from your perspective within this regard?
I typically think that the biggest challenge any startup has is uncertainty. Like you really don't know how things are going to end up. You're not sure if what you're developing is the solution that's big enough or whether it's a solution at all. And I mean, you can reduce the uncertainty various ways. First, you could do that by, say, taking an investment and, having a longer runway to test what you're testing. You can do that by um, cooperating with like other startups like you, maybe by being domiciled in a hub or a cluster, such that you can feed off each other and use complementary services and move further. You can also do that by basically partnering with larger companies, right? And I think that we're beginning to see some of these things happen. For instance, a couple of years ago, a company called Vanso was acquired by InterSwitch, um, sort of like to expand their offering and to become a much bigger company. And I see a lot more of that happening in the future. The thing that is happening now, though, is I think there's a bit of mismatch in expectations. I think a lot of the larger companies think startups are overvalued and really can't be worth that much, seeing as they're just doing the small thing. And on the other hand, I think startups also, in a bunch of cases, feel like they're a lot bigger than they actually should be. So there's that mismatch of expectations. But I think that as more avenues begin to open up for them to collaborate, either on side projects or things like that, they'll start to basically gauge each other a bit better. And once the conversation starts going, we'll see a lot more mergers and um, this sort of coming together that would kick the ball way farther than they would have gone individually.
And then with other emergent startups as well, take for example within the agriculture value chain or in fashion and design, what sort of interplay do you also see there?
I mean, I like to think about, I think the first thing, regarding interplay is that I think that today technology is sort of no longer a sector. It's that one thing that is everywhere. If you're in fashion design today, you better be using technology. If you're in agriculture today, you better be thinking about how to deploy technology, right? So I think that technology binds all these things together. And I think that typically, if any of those sectors starts to grow, it grows the economy. And when the economy starts to go up, all the boats sort of rise together. So I think that we would start to see a lot more collaborations across board. How can we use technology to make farmers yield a lot more? How can we use technology to, store and transport goods, farm goods a lot more? How can we use technology in the fashion industry? How can we start to retail some of our fashion, which is taking over the world via things like our music and Hollywood? How can we start to retail them across the world using technology? How can we break into the global fashion market, while sitting here in Nigeria? I think there's a lot of interesting stuff that's on the horizon.
Well, wrapping up our conversation now, what's your forecast for Nigeria and Africa's startup ecosystem? The experience, especially with regards to scaling up through alliances with large corporates, have more incentives, grants from governments and bodies like the African Development Bank.
All right. So I think firstly, I think the future of the ecosystem, in Nigeria and Africa as a whole is bright. I think that one of the really important components of that bright future we already have, which is the young demographic. What's missing right now is infrastructure and also human capital development. In those two areas that are missing, I think we're already seeing some shifts. For instance, if you compare, what the speed of internet was like 5 years ago, or what internet cost like 5 years ago with today, you can see that there's already, some shift in the positive direction. And that in itself, the internet is sort of like, maybe the most important infrastructure in today's age. There's more infrastructure that needs to be built, not just the internet, but I think that we're seeing like a little bit of shift. In terms of human capital development, I think that people are already connecting sort of to the global economy and the global information fire hose, and are tapping into this knowledge to upskill themselves. Some of those people are actually already connected to the global economy and, you know, working for companies abroad while living here and things like that. I think that while, you know, there's some shifts in that direction, more needs to happen. I think that a lot more funding needs to go into things like research. A lot more funding needs to go into, you know, even infrastructure. A lot more funding needs to go into programs, you know, that incentivize people to pick up some of these skills of the future. I think that one of the mechanisms, you know, like you said, to use Colab as an example, one of the mechanisms to do that is like through things like innovation hubs, through sort of co-creation with startups, through programs that basically incentivize increased productivity across the board. And I think that this funding can come from many places. Like it can come from, you know, development partners, it can come from the government itself, it could come from private individuals. The only thing that I would want to wrap that up with, you know, in terms of caution, a sort of caution is that I personally think that the government is better suited for building rails, so building like the underlying infrastructure and the underlying enable environment. And I mean, it should do that and incentivize the private sector to do, you know, some of the more heavy lifting, which is like actually, you know, building out those hubs and, you know, creating those avenues for production to happen.
Well, thank you very much for your time on the show today. It's been a pleasure speaking with you.
You're welcome. Happy to be here.
Just before we go now, here are graphic details of rail transportation data for the second quarter of this year. Well, that's it on this edition of Business Week. Many thanks for watching so far. Do enjoy the rest of your weekend. I'm David Alabi. Bye for now.